Let's be honest. Most investment decks sound like legal textbooks, and the more complex a strategy, the harder it is to win trust. If your investors don't fully understand the mechanics, they will not commit capital. Hi, I'm Liam Jones. I'm General Partner and Head of Capital Strategy at Lonify Capital, and I lead our capital strategy, our investor acquisition, and communication for our fixed yield private credit vehicles. Over the years, I've helped raise and manage multi-million-dollar allocations from accredited investors, family offices, and institutional allocators, all by focusing on one thing: clarity in complexity. So here are 3 ways that I communicate intricate investment mechanics clearly, confidently, and effectively. Point 1, simplify the story before you explain the structure. So start with the big picture. Before I talk about cash flow waterfalls or risk protocols, I frame the investment like a narrative, right? So for example, we deploy capital into high yielding receivables that are underwritten with institutional grade risk controls to then deliver stable, non-correlated returns. See, that sentence gives investors an anchor. Then we build into the details like diversification controls or stress scenario modeling. Remember, if they don't understand the story, they won't absorb the structure. And point 2, use visual aids and analogies. Right? When you're explaining things like AI integrated risk systems or multi-tier cash allocations, words alone won't cut it. Right? I often use simple flow diagrams or visualize waterfalls or even analogies like comparing tranche structures to insurance layers. This brings the technical to life, right? And even in private capital, clear visual storytelling gives sophisticated allocators what they want, right? It's insight without overload. And then point 3, I want to match the message to the audience. An institutional allocator wants to see governance models, right? A family office cares about principal protection. So tailoring your message, it isn't marketing, it's respect for their lens. Now, I've presented to chief investment officers, private wealth advisors, and direct investors, and the common thread is that they invest when they're confident, and clarity creates confidence. So to sum it up, start with the story, support it with visuals, and speak their language. When you do that well, even the most complex strategies become very, very easy to follow and easy to back. So if you're navigating private credit allocations and you need transparent high yield strategies with institutional discipline, I'm always open to a direct conversation.